Hello everyone, and you're watching Bitcoin Bubble News channel. Bitcoin is interesting because it's the first time we've really come up with fast payment. This means that as long as the network stays pretty decentralized, I can send you money, and in 10, 20, or 30 minutes, your Bitcoin is confirmed on the chain, and I can't take it back. That's pretty much the end of it. Unless most miners decide to start undoing transactions and other things, that's the first real option then. For figuring out that answer, then it has to be tried for a very long time, right? Then thousands of other cryptocurrencies are made, and people ask themselves, can these do it better? Even though Bitcoin's price dropped below $55,000, its network has shown incredible strength by reaching an all-time high hash rate of 679 exahash per second on September 7, 2024. Such a result shows that the network is strong and stable, especially now that the price of Bitcoin is having problems. In her most recent interview, investment expert Lyn Alden says that Bitcoin's decentralized network and strong security features, which are necessary for fast payments, make it very durable. Lyn Alden stresses how important it is to know who owns the ledger in order to keep money from losing value. She points out that central banks like certain assets and developing countries depend on physical currencies. As Bitcoin gets more popular, its decentralized record is still a big part of what makes it appealing and a big reason why it could grow and be used by more people in the future. Lyn Alden also talks about how Bitcoin's ability to provide fast payment has led to the creation of dozens of other cryptocurrencies, all of which try to be better than Bitcoin in terms of design and functionality. Even so, she agrees that Bitcoin is still a small market compared to the world's traditional money business. You can watch parts of the talk to learn more about what Lyn Alden said. If you want to see more videos like this one, please like it, subscribe to the channel, and turn on post alerts. Have fun with the movie. When it comes to gold and silver, the challenge level changes automatically as our technology gets better at finding them. However, many of the easiest deposits have already been mined. Our technology is getting better, so the deposits are getting harder, but we're not really making more of them too fast. If you look at gold prices over the last 100 years, they've been all over the place. These numbers come from the US Geological Survey and the World Gold Council. You can look at a few different data sources, but the average annual growth rate for the gold stock is thought to be between 1% and 2%. And the band has been pretty close. You have to go back to the gold rush to find a time when we really broke through that. Again, that was because an industrialized society was coming to a continent that wasn't industrialized yet. For at least a while, they could pick a lot of easy gold mines. So basically, societies learned over time that gold and silver are the best ones. Another important reason why silver kept its value was because gold couldn't be split up. Small gold coin was worth more than most things you could buy. Silver, then, was the metal that people used most often. Before technology, speed didn't matter, so this is set in that time. It seemed like everything moved at about the same speed. Coinage is one thing that could help speed up the process of weighing and checking a good. Besides those few things, there wasn't a big change in speed. Now that we have telecommunications, we can send things. This began in the middle of the 1800s when long-distance telegraph lines were laid, and it made it possible to do business very quickly over long distances. So we began to summarize and print out everything. And it felt like we were taking off from gold. In other words, it's the first time we switched from a better commodity to a weaker one, like the dollar to a less sound ledger system. As time went on, we got better and better, from shells to tobacco to silver to gold. We started going backwards because speed was now an important factor. That's right, people have been settling on gold for a long time for a reason. The reason for this is that it has the biggest stock to flow ratio. How much is there now compared to how much can be made in a year? So it's clear that it has great properties for how much value it can hold and how long it lasts when kept. There's a reason why all of those things line up to be good money. Which is why it's used as good money. It should be easier to figure out how to make fast deals than fast settlements, right? You can do business quickly if you know Morse code and the telegraph. Over the Atlantic Ocean, two people can talk and agree on a deal. The hard and slow part comes next, sending and checking gold. Even in modern times, when Germany brought its gold back home, they thought it would take around 7 years. They were glad it was over in 4 years, which is a ridiculously short amount of time given how much it costs for logistics, security reporting, and other things. Settlements have been a trouble spot. One thing I talk about in the book is how interesting Bitcoin is because it's kind of the first time we invented fast payment. This means that I can send you money as long as the network stays mostly decentralized. And in 10, 20, or 30 minutes, your Bitcoin is confirmed on the chain. I can't take that back. That's pretty much the end of it. Unless most miners decide to start undoing transactions and other things, that's pretty much the first real chance of getting that answer. After that, it has to be tried for a very long time. Okay. Then thousands of other cryptocurrencies are made, and people ask themselves, can these do it better? Could we? Is there a way to hack it? Or how can it be improved over time to work better? It's still a very small market, but all of these things can happen. So the market value is only a trillion plus. The value of all paper money in the world is about 100 trillion. Lyn Alden says that slow settlements are still a worry, even though Bitcoin's decentralized ledger makes deals fast. She notices that when central banks keep assets, they value speed, choosing stocks that are easy to sell over gold because of the problems that come with moving it. People also like faster ways to store value like the SP 500 or real estate. But people like Lyn Alden point out that these choices might not be available in poor countries that value real dollars or gold more. She stresses how important it is to know who is in charge of the ledger because trust is key to keeping money from losing value. She also talks about Egypt's structural money supply growth, which makes the Egyptian pound lose 20% of its value every year, and how this affects trust in the ledger. To learn more from Lyn Alden, let's watch more clips from the talk. It seems like a great idea, but I guess it will take some time for the market to try it and accept it. So as long as Bitcoin is small and fiat is large, we'll be in a strange state of fast trades and slow settlements. One thing you can see is that they see speed as the variable both on an individual and a national level. In other words, one big reason why central banks hold bonds is that they can sell them at any time. They only need to say we want to sell the treasury and buy back our own money if they have gold. On the other hand, it's hard to say, hey, we just want to sell $10 billion worth of gold right now. Because of this, they hold on to the part of their savings that they don't plan to touch for a while. Instead, they hold on to other investments that will earn them money faster. For people, they start making money off of things like the SP 500, beachfront or lakefront real estate or fine art, right? There are other forms of money that can be used instead of gold, but they aren't really money in the usual sense. Things like that become our main way to store value. In growing markets, that's not always possible. A lot of people, especially in developed markets, forget that. Someone from the middle class in Egypt can't easily buy the SP 500, and their own stock market isn't as good at holding its value over time. This is why, unfortunately, people in those markets tend to move toward physical dollars or gold. And in those places, these are still used to store value. Lyn, why is it so important to know who owns the ledger? When we think of money, it's like a book, right? It could be in a physical or an abstract way. Okay, so you brought up trade as an example. In the book, I talk about how when I was a young engineer, my coworkers and I would often go out to lunch together. We'd take turns driving, and if someone at lunch doesn't have enough cash on hand, we'd have to pay with cash most of the time. They would say, hey, could you just pay for this? I pay you back tomorrow. This record is kind of kept track of by everyone. Who drives enough? Who doesn't drive enough? Who needs to pay someone? Having this mental journal, this kind of informal mental ledger between us, helps us figure out a lot of things. A lot of hunter-gatherers also do it that way. The system is pretty much the same as